Well, we're talking tax today. We're joined by Mr. Taiwo Oyedele, who is the head tax and corporate advisory services of PwC. Thank you for coming on this morning.
Thank you for having me.
The first part of Mr. Fowler's comments, they were talking about the kind of books that they keep. Some have two books, one for this and the other for that. And so the impression out there is that, yes, they'll go ahead and correct it and ensure that the right things are done. But then, towards the latter part of that comment, he talks about funding government. And then I just recall it takes our mind back to some recent headlines about FG's plan to raise VAT to 10%. That's going to be a huge one now. But let's get your perspective about, first and foremost, two books. If he says they want to go ahead and correct it, how easy or difficult is it going to be?
Interesting, actually. It's going to be very difficult. Difficult because tax has not been part of our DNA in Nigeria. So you find a lot of people who are doing businesses and they don't even think about tax. So he was talking about keeping two records. Some actually have more than two records. So we had a meeting last week with the new FRS chairman. And one of my colleagues was saying to me that a Nigerian business has just been acquired by a foreign company. And they realized that the turnover they've been reporting for so many years has been about 1/15, 1/15 of the actual turnover. And those guys said, we're a multinational company, we have to now report the true turnover. And the question is, how are you going to explain turnover just increasing by 15 folds overnight? Now, they've been doing that and getting away with it. Truth of the matter is, anywhere in the world, it's not as if Nigerians are terrible people and people in other countries are saints. What's lacking is the enforcement and consequences for not doing the right thing. If there are no consequences, people tend to do what is convenient. And it just so happens that paying tax is not one of the most convenient things in the world. So if the FRS is now saying it's no longer business as usual, that would be a welcome development. But we need to then think about it holistically. It's not just because now oil prices are down, we're struggling to pay salaries, we talk about tax. And if anything changes tomorrow, we forget about it again. So it's not sustainable. The reality now is, with the way crude oil price is going, it's currently under $50 per barrel. You have the Iranian deal, they're producing more. You have America gaining efficiency, doing shale oil and gas. And you have issues with China, right? So consumption is going down and supply is increasing. So we should now face the reality that where we are now is going to be the new normal. And therefore, we must start looking at tax with the light of we must all contribute to be able to fund this economy, to be able to fund government and make things work.
In that his comment too, one thing that businesses have always talked about across the country is multiple taxation. He didn't talk about it. Does that mean that, okay, well, maybe that's necessarily the case, but that's what a lot of people want to hear first and foremost. Yes, nobody, at least many, will gladly or maybe grudgingly pay the tax. They don't like to just go ahead and do it. But shouldn't that have popped up first, saying, look, we know we have this challenge. Businesses have complained about it. In fact, it kills businesses. Shouldn't they address it first and foremost before you then come forward and say, okay, look, these are the other things we would like to do?
Yeah, there are things you can't achieve immediately. You need to have your quick wins, medium-term, long-term goals. And this issue of multiple taxation has always been with us. I assisted the Manufacturers Association of Nigeria recently to try and address this issue. And then we came up with, part of the survey they conducted before we started the project was to try and ask their members in different states, how many taxes do you guys pay? These are manufacturers. They're not banks. They're not oil companies. And in one of the states, manufacturers were paying up to 97 different taxes. 97. 97.
Whoa.
So what you then find is only a few people are paying taxes in Nigeria. According to even the information by the Ministry of Finance, you have only 25% of companies in Nigeria registered with the tax authority. Out of those that are registered, 65% of them are not even filing returns. So you have 35% of 25% are compliant. That's less than 9%. Now, these 9% are overtaxed because of the multiple taxation we have. And what that does is, apart from the fact that you're not able to raise tax revenue because your tax base is very small, you also make people who are tax compliant to be uncompetitive. So which then means that the rest of the guys who are not paying taxes have more money to throw around, and they can even go from a price point of view, reduce their prices and push you out of the market. And that's why you see MAN, for example, complaining every time about their members having to relocate to Ghana and the rest of it, because it's just not possible to do business.
Well, quite a number of things that you've said within a short space of time, because I think the first question was about, you know, double books. First of all, you say that Nigerians are no different from people elsewhere and that there must be consequences. But the question is, how would you even know that they are double books?
It's by doing your audit. In fact, you know, one of the things that the new FRS chairman is trying to do is to audit 450,000 companies.
How is that possible?
Nobody does that. They don't even have the capacity to do it.
Yeah.
Now, what you do is there's what we call risk-based audit. And even before then, you must collect data and profile every taxpayer so that what you only focus on are the exceptions. So, for example, if you haven't audited your financial statements in 1 or 2 years, some haven't done it in 10 years, you are a red flag company for me. Okay? Chances that you're not paying or even disclosing the right amount of revenue is very high. If you also have companies where, for example, they have directors who haven't even paid their personal income taxes. So you would imagine the owner of a company who is not himself paying taxes, it's unlikely for his company to pay tax. Look at VAT, for example, that you mentioned earlier on. A lot of companies and businesses are not even registered, let alone charging VAT. So which is why the issue of raising it from 5 to 10 shouldn't be the focus now. The focus should be, let's get everybody into the tax net. Let's even start paying the 5% first and foremost. And then we can think of how do we increase it to 10%. And my view on that has always been that we should even be looking at 15%. But the only way you can do that is to take care of the poor people. Make sure that basic food item, educational material, pharmaceutical products are exempt from VAT or they carry 0%, which we call zero-rated VAT.
Which is not the case now.
Which is not the case, because even though you have a few of those things that are exempt, but it's not generally the case. And then you don't want the poor people who are already suffering to now have a higher burden of tax. But there are loads of us, middle class, rich people, we import, the highest importer of French wine in the world are Nigerians. We buy expensive cars, we buy private jet, it's okay, but let's also pay tax. So I think at the end of the day, it has to be a holistic process where we try and address all the issues. First, bring everybody into the tax net. Make sure that you do enforce. There are companies that haven't been audited by the FRS for 10 years. So if you have been doing something and getting away with it for 10 years, what's the incentive not to do it anymore? So once you start enforcing compliance, you find people who are not 100% compliant, you deal with them, including people who start going to jail if they don't pay taxes. Because there's a big difference between evasion and avoidance.